there's one thing I do regret at this moment is for us prepping using Malaysian examples, because this live stream, I'm probably going to go to jail after this. But ladies and gentlemen, I think that the leader, the Deputy Prime Minister at this point in the debate has been highly unresponsive to the comparative of this debate. Because the comparative isn't this democratically, apparently very, very accountable government institution that's apparently able to run the functions of a financial industry and cater to every single financial variability in status quo. I'll respond to that and weave in my rebuttal material. But firstly, I think I'm going to engage with the worst possible case scenario in opening government, the doomsday scenario in which banks are too huge to fail, have excessive lobby power, and extremely influential in this part of the scenario. I'll tell you in that comparative why it's still better. Three things. Firstly, ladies and gentlemen, in the instance where banks are too huge to fail, and the instance in which, let's say, there's a financial crisis that's motivated by the banking industry, and they actually result in a financial breakdown, at that point in time, in most sensible countries, for example, Iceland after the 2007 financial crisis, were able to break them up and easier regulate these countries. Because you can quote the exception of the United States of America, which is apparently the norm in status quo, it doesn't mean that everywhere else, in most sensible financial sectors and economies, most countries were able to break them up and are able to nationalize them for momentarily, ladies and gentlemen, then finally after that, give them back to the private sector on our side of the house. The comparative under our side is that in order to maintain robust growth and recovery after a financial crisis, at the very least, the banks are too huge to fail. Under government regulation, we can still nationalize those banks, but while maintaining smaller financial institutions and smaller banks that are able to maintain flexibility in terms of investment, whether it be high risk and low risk, and still be able to contribute to the SME growth or the kind of robust growth that you want under our side of the house. There's no such flexibility on the government on that side of the house, because the too big to fail ones are the exact excuse that you use to nationalize also every other financial institution on that side of the house, giving no flexibility whatsoever in terms of investment. But secondly, it's also absolutely not true that there's no too big to fail institutions on a nationalized system, because the exact political structure and incentives of a government means there's more likely that nationalized systems don't admit that they are wrong and prop up failing financial institutions when they are originally inefficient. It is only with a competing financial industry that is private that pushes public industries to be able to be more efficient at the end of the day. If you have absolutely no competition on that side of the house, you have an inflated public sector that fundamentally, ladies and gentlemen, just gets more inflated. Has, number one, no excuse to get better because you have absolutely no option to go to as a consumer. But secondly, ladies and gentlemen, that it looks bad as a political move to admit that you're wrong and then break up your bank or admit that it's too big to fail. That's why competing interests and a nice cooperation between the two means that at least we can hold governments accountable in providing good services under that side of the house. We've seen no analysis provide some degree of competition on that side of the house to account for the political dynamics there. But lastly, ladies and gentlemen, they still haven't responded to our analysis in regard to financial failure that isn't motivated by a breakdown in the financial industry. What is a breakdown in the economy due to governmental failure or, ladies and gentlemen, any other sector of society that's apparently too big to fail or that drives economic failure? The point is that financial institutions, regardless of the reason why you ended up in financial crisis, ladies and gentlemen, drives growth and drives recovery at the end of the day. The fact that if you have your agricultural industry like deflated and like failed on that side of the house, the financial sector and the trust in the financial sector, and not the government that had bad regulation to begin with and caused the failure and the inefficiency on that side of the house, makes people a lot more confident in regards to investing back in your economy. We've seen no analysis on that side of the house in regards to what happens if financial crises are actually duly created by governmental failure. How do you incentivize individuals to have any faith in that economy rather than a spiral downwards in which individuals continually think that your financial industry is dominated by the very same actors that caused your financial crisis to begin with. That's why we thought that at that side of the house, even at our worst case scenario, ladies and gentlemen, at the very least we could say that the competition as well as the competing interests that we could provide, at the very least, ladies and gentlemen, in most sensible context, will result in better outcomes on our side of the house. We think we win that comparative. Before I go on any further, I'll take a closing.
Even if the misallocation of financial resources were to lead to medium-term growth falling by as much as 0.25%, would this be worthwhile if we were able to reduce the possibility of an extremely painful and protracted recession?
Number one, all those things are contingent upon the national banks actually being able to provide that, prevent those sort of long-term recession, or even that our private banks were unable to provide more growth and long-term growth. Try harder, Tom. So, ladies and gentlemen, now the next thing I want to talk about is in regards to civil service, because we specifically heard from the Deputy Prime Minister D told us that most probably in response to Dan's POI, thanks man, that civil servants are most probably going to be the individuals that are going to take over this particular industries, which I think buttresses the point in which civil servants are oftentimes beholden to political interests as well, ladies and gentlemen. That oftentimes your employer is the exact same people that determine what national agenda or ideology that you have. The only response that we got from D in regards to political incentive driving that particular sector is that they told us that, oh, those policies are probably going to be implemented anyway. But this debate is a comparative. Governments are more able to shave off the political pressure of voters when they can actually say that that's a separate entity or separate legal entity, ladies and gentlemen, and say that the private sector actually brings us some benefit. I think the comparative is that when you are the government and political actor and that financial institution is the representation of your institution, ladies and gentlemen, there's a far greater political incentive for you to align your ideological standards to those financial institutions. But now I want to talk about insurance companies per se, because I think this is exceptionally important in cases where minority groups are oftentimes disenfranchised, where they don't have a private option. We've seen many instances where public options or public dominance, ladies and gentlemen, means that you don't get insurance for things like, for example, transgender care, for example, the ability for you to see, for example, to get blood transfusion in some instances, or some kind of care that you want. Sure, on that side of the house, you may say that some governments may be able to do it, but the fact is, ladies and gentlemen, governments are more able to appease their voters and say that private institutions are able to do this. We've seen this many times across the past. Ladies and gentlemen, this debate must speak in the context of the global context where in most circumstances governments are reasonable. We must maintain some balance because innovation and financial growth isn't created by nationalization and dominance of some public sector but a corporation of both. I've never been prouder.